Welcome. If you can hear me, please confirm to me that you can see my screen and also you can hear my voice. Please confirm to me that you can see my screen and you can hear my voice. Confirm to me that you can see my screen and you can also hear my voice. Please confirm to me that you can see my screen and you can also hear my voice. Use the chat box if you are here with me. Use the chat box so we can start right away. Alright, I can see Mr. Patrick. I can see Lawal Adisa Mustafa. You're welcome. You're welcome. If you are here on this call with me, please comment. Let me know that you are here with me. Alright, I can see Mr. Peter Josephine. I can see Martins Ekoja. You're welcome. You're welcome. You're welcome. Let me check for you. Yeah, fast. I'm talking now. I'm looking for more. I feel like this is good. Come on, please. All right. So we are here, and you are still with me. Okay. All right. Good afternoon. Good day. I don't know the time that you are using wherever you are hearing me from. I'm quite sure that majority of us we are Nigerians. Okay. So good day, everyone. And let me welcome you again to day two of our masterclass on how to prepare IFRS based financial statement using Microsoft Excel. So yesterday was our day one of the masterclass where we discussed the in-depth meaning of financial statements. We also looked at the components of financial statement alongside with the element of financial statements. Also yesterday, we look at the comparison between what we call elements and what we call components of financial statements. And I'm quite sure that everyone that attended yesterday's session got value for their time. All right. Peradventure, if you miss the session, the replay link, the replay link is on the group. So we have shared it. So also yesterday, before I round up, we looked at the Excel framework, meaning the procedures that we must follow whenever we are preparing an IFRS based financial statement using Microsoft Excel. So as I said earlier on, I've shared the replay link on our WhatsApp group. So if probably you missed the session or you want a recap of the class, you can get to see them right there before it's being revoked. So today, I'll be showing you the live play of how to prepare financial statements with Microsoft Excel. Okay? So let me know if you are ready again. Comment ready. Let me know if you are ready while I share my Excel screen. Comment ready and let me know if you can see my Excel screen. Comment ready. Let me know if you can see my Excel screen. Let me know if you can see my Excel screen. Okay. Please let me know if you can see my Excel screen. I can see um I don't know this AI news. One for Jacinta Okamaka. You're welcome. Okay, so let me know if you can see my Excel screen. My Excel screen is up. Let me know if you can see the screen. I need confirmation before I move on. If you can see my Excel screen or you cannot see it, let me know. All right, all right. Okay, thank you, Mr. Lawal. Thank you, for Jacinta. I don't know if I pronounced her name correctly. All right, okay. So now, if you remember from our yesterday session, I said before we can prepare our financial statements, okay, some things has to be in place. And I showed you guys the tree diagram of what the financial statement would look like. What are the procedures that we must follow? All right. And the first thing or the first step in preparing financial statement with Microsoft Excel is the preparation of our trial balance, right? And from yesterday's session, we also said that trial balance is a list of ledger balances. Trial balance is a list of ledger balances. It is not an account. So peradventure you hear anyone saying that trial balance debit side or trial balance credit side, it means that that person does not really understand what he or she is saying, because trial balance has columns. It's not an account that has debit side and credit side. So that's why by definition then is in school days they will say trial balance is a statement prepared to show the arithmetic accuracy of ledger balances, and at the same time it is also prepared to test whether the ledgers that we have extracted is correct or not correct. Alright. So now when we are preparing our financial statement, the work starts from the trial balance. Alright. The work starts from the trial balance, and based on what I explained yesterday, I said there are two ways or two sources to this your trial balance. It is either you prepare the trial balance yourself, or you export the trial balance from whichever accounting software you are using in your organization or in your company. Okay, if you prepare your trial balance yourself, then you want to follow a rule that we use in preparing trial balance. That rule yesterday I said it is called declip, and it's still on my screen as we speak. The rule is called declip, DEACLIP, declip. And what does declip means? It simply means debit all expenses and assets, credit liabilities, incomes and provisions. That is what declip is. Now this is the rule that you must use in preparing your trial balance. As a matter of fact, if your trial balance is against the declip rule, then you're going to have problem in that trial balance. Okay, and if you use a trial balance that contains error to prepare a financial statement, we all know what is going to be the end result of such financial statement. That's why it is very much important to ensure that we follow the declip rule in preparing our trial balance. However, if your trial balance is exported from your accounting software, be it QuickBooks Online or QuickBooks Desktop, Sage, Microsoft Dynamics, Accounting 01, whichever software you are using in your company, make sure that you are extracting your trial balance from your software. And as I said it yesterday, I don't usually advise my students to rely 100% on the QuickBooks to get their report for them. Reason is because you cannot place 100% reliance on your software, as a matter of the fact that some softwares contain errors, and you might not be able to defend such errors whenever it occur or whenever you notice them. So make sure you export your trial balance from software, and while exporting, also put that trial balance to the clip test. And what do I mean? Check the debit column of your trial balance and the credit column. Ensure that any item that is going to appear on the debit column of your trial balance is either asset or expense. Let me say that again. When you are putting your declip rule into test, that is when you did not prepare the trial balance yourself. Alright? If you don't prepare the trial balance yourself, then you have to test the trial balance that you have extracted from your software. Okay, it is much more easier from when I was in audit firm. Reason is because the normal procedure of audit is that once I'm going for, okay, let's say I'm coming to audit your company. You are the accountant. I'm going to send you a letter. On that letter, you see the list of what I needed, right? At the top of the list is going to be your management account, your trial balance and ledger. If I didn't receive those three and other lists, okay, but my own practice is that if I didn't receive those three things, okay, I am not going to commence for that. As a matter of fact, if you cannot even get a management account, so far you can give me ledgers and trial balance, I'm fine, right? Now, once I get trial balance, the first I want to do is look at the trial balance, ensure that everything is right. There was a time I got access to a client trial balance, and I'm seeing revenue on the debit side. Obviously, revenue is an income according to the clip rule, right? And it's supposed to be on the credit column of the trial balance. Now I am seeing revenue on the debit column. What did I do? I had to send back the trial balance. I had to like message email the guy, let him know that this trial balance I cannot use it because it contains error. I cannot be correcting trial balance because the guy did not check the trial balance himself. So when you are exporting your trial balance, make sure that you check every item on the debit, make sure that they are either expense or assets, and every item on the credit, make sure that they are either liability, income or provisions. As a matter of fact, every item on your chart of account should appear on your trial balance. Let me say this again. Every item on your chart of account should also appear on your trial balance. As you can see, all these are what we call the chart of account item. Everything on this side are what we call the chart of account. As you can see, kiosk, logistic, you can see loan on foreign exchange, you can see mail agreement fee. Depending on your company, organizations will have different line item, but make sure that each of those line item are classified as either expense, assets, incomes, liability or provision. Once you have done that, you want to scroll down to your trial balance and check if it is agreeing, meaning you want to come down to your trial balance and make sure that the debit column and the credit column are showing the same total. Okay, make sure that the debit column and the credit column are showing the same total. If the total of the debit column is not the same as the total of the credit column, then you are going to have a problem. Okay, you are going to have a problem, obviously. And that's one of the tests that you must put your trial balance into. If your total are not the same, then there's a problem from how you prepare your financial statement, if you prepared it yourself, or from the software that you have extracted it from, if you extracted it from the software. However, if everything are okay, things are perfect, then the debit column of your trial balance and the credit column must be the same. Once that is done, the next thing you want to work on is your extended trial balance. And if you are in this class yesterday, I said extended trial balance is one of the is the major page. Okay, as a matter of fact, in my ebook, remember I said I have a book on how on the 5 steps that you must follow that you use to be paying financial statement. When I was talking about ETB, I said this ETB is the cooking pot. Reason why I said that is because if you are able to master how to prepare a good extended trial balance, then you already have over 70% of financial statement preparation knowledge. Let me say that again. If you are able to master how to prepare a good extended trial balance, then you already have over 80% of financial statement preparation knowledge, because everything that we have here, everything that we are doing here is we start from this ETB. Okay, now usually when you set up this like this, you are going to have an empty page. What you want to do first is, after you have put the name of the company, and let me add this again, ETB is a control sheet, is a cooking pot of financial statements, and at the same time it has 5 different trial balances. Okay, it has 5 different trial balances, and that is why it is very very important you master this. Okay, this is one of the reasons why what I'm about to reveal to you is usually not talked about. I can count a number of people that can come out openly like this and tell people that I want to give you this, because this is what audit firms use to make money, and I'm giving it out so you can see and you can become a better accountant, whether you are in practice or you are not in practice. I know a lot of people want to go back into practice, but they don't have the knowledge. I have a boss. Let me hide his name. Okay, yes, he's a graduate of over 20 years, right? But when it comes to delivery on task, he find it difficult to deliver. Reason is because he doesn't have all this sophisticated knowledge. And I can't tell him that boss, come, let me train you. No, I won't do that to my boss. But I know there's something missing for him. So this is why you have to pay attention to whatever we have to discuss there and pick what you need to pick. And by the way, I've been able to discuss with my team, and I have an offer coming up at the end of today's class, and it's just for 10 people. Okay, just 10 people. If you are lucky enough and you are among the 10 that were able to stay through the end of this call and you get in at that offer, luckily for you, and I wish you congratulations, because you're going to get access to something amazing. All right. Now, moving on now. The first thing you want to do once you open your ETB is to use your chart of account items. All right. Your chart of account items. Those that you call your revenue item, your list of assets, your list of capital, your list of expenses, all those things. You want to use them to set up these parts. All right. These parts that is highlighted. This part that my cursor is on, yes. You set it up. You can choose to arrange it, you can choose not to arrange it. All right. What do I mean by you can choose to arrange it? Now, you want to put assets together. If you look at what I have on my screen, you see that fixed assets come first, followed by accumulated depreciation, followed by cash and bank. Again, there is no IAS or IFRS standard that says that you must arrange them, right? But because I love delivering a good work and I love teaching people to understand in the easiest way possible. So make sure you are grouping all your assets together, your cash and bank balances, group them together, your trade receivable, all those your current asset item, put them together. As you can see, that is how these were actually grouped. If you scroll down and you see more, as you can see, everything were grouped together. As you can see, these are what all our expense, these are our cost of sales, these are our revenue line item, this is the capital and retained earnings, these are liabilities. All right, these are trade and other receipts, something like that. So once you group them, after you have good, then you want to link. Follow me now. All right, if you are not following me, please, I'm begging you, either you leave this call or you follow me. Okay, so now once you have prepared, you want to link this first trial balance. Remember I said yesterday it has 5 trial balances. It has the first trial balance, which is the main trial balance. It has transactional journal, another trial balance. It has final trial balance. It has statement of profit or loss trial balance, and it has statement of financial position trial balance. All right. So those are the 5 trial balances on our extended trial balance. And again, once you're able to master preparation of a good extended trial balance, I can categorically tell you that you are cool to go. All right. I can categorically tell you that you are cool to go, because the art of preparing an extended trial balance is more than 80% knowledge of what we're about to discuss. All right. So now let's proceed. Now you want to link your main trial balance page. Okay, you want to link this trial balance into your extended trial balance. So what do we do? Remember our rule. Every asset, or let me say all assets, must be on the debit column, all liabilities on the credit, all expenses on the debit, incomes on the credit, provision on the credit. So this is asset. So office equipment, you do equals to, okay, go to the trial balance page, you then look for office equipment. All right. I can see this is equipment. All right. 3050. Click the figure, enter. Okay. The next one is furniture, equals to, go to the trial balance page, you look for furniture. This is furniture here. Click the figure, enter. All right. The next one is computer equipment, equals to, go to the trial balance and look for computer equipment. This is it, computer. All right. 245. Click the figure, enter. All right. The second one is what? Office equipment accumulated depreciation. Remember, accumulated depreciation means that the provision that we have made for our depreciation. All right. That's what accumulated depreciation means. The provision that we have made for depreciation on our fixed assets, majorly PPE, according to IAS 16, right? And provision, according to the CLIP rule, will be on the credit column of the trial balance. So we'll come to the credit column, equals to, now we'll go to our trial balance and go and look for accumulated depreciation on office equipment. So let's go to trial balance. We need accumulated depreciation on office equipment, which is this. As you can see, this. So you pick the figure on the credit column, then enter. All right. Furniture and fitting, the same thing. We need accumulated depreciation on furniture and fittings. Go to trial balance. Okay. Click the figure, enter. Computer equipment equals to accumulated depreciation on computer, which is this. Okay. Click the figure, enter. All right. Cash in hand. Cash in hand is an asset. It's going to be on the debit. So equals to cash in hand. This cash on hand, okay, 159. Click the figure, enter. We need Ecobank Naira balance equals to Ecobank Naira, which is this. Click the figure, enter. Ecobank USD equals to, go to the trial balance, look for Ecobank USD, which is this. Click the figure, enter. All right. Stanbic IBTC accounts Naira equals to, go to trial balance and look for Stanbic IBTC Naira. Okay, this is what we are looking for here. As you can see here, so you click the figure, enter. Stanbic IBTC USD equals to, go to trial balance and look for USD. Stanbic IBTC 10,692. This figure. So click the figure, enter. All right. Mutual fund account equals to mutual fund. Okay, so let's look for our mutual fund. All right, I found that here, 750. Enter. All right. POS account, that's all the sales that we made with POS, which is this. All right, 49,400. Click the figure, enter. All right, so that's basically how you enter for every other item here. All right, that's basically how you are going to enter for every other item here. Let me clear this a bit. All right, so once you have entered for all of these items, you want to scroll down. Focus on the trial balance for now. You want to scroll down. Look at the part painted yellow. All right, look at the part, sorry, the part painted in red. That's the total column. Okay, and on your trial balance, okay, you want to make sure that you arrive at the same total. Let me say that again. Look at it. This is 73,116,455.79. This also 73,116,455.79. You want to make sure that the total year and the total year agree to what you have on your trial balance. Why? Because you didn't do anything extra. You only pick the figure from trial balance and bring it here. So the total of this place and the total on your trial balance must be the same. So let's cross check. Look at it here. On my trial balance here, I have 73,116,455.79, both debit column and credit column total. Then let's check the total here. You can see they are giving me the same figure. Peradventure, if you are doing your own, you are not getting the same figure, then there's a problem. And the problem can only means one thing. Okay, it simply means that there are some items that you have not picked. For example, let me quickly show you what I'm trying to say. Let's say while we were picking, right, we didn't pick this POS sales. We didn't pick it. It's not there. Now if you scroll down, you notice that it did not balance, right? You can see the difference there, 49,400. And if you go back to our trial balance, you see that our trial balance agree. So this one did not agree. Means that we have not picked an item. And that item that we have not picked is the what? POS sales account. So once we pick that, it's going to balance. Okay? So we achieve this. That's step one. The second thing you want to do is, after you are done with your main trial balance, the next trial balance on your ETB. Okay? The next trial balance on your ETB is your transactional journal. And listen to this very well. Let me quickly say it, because how to work with transactional journal is not within the scope of this free masterclass. All right? Probably when you're able to when you're lucky enough to join one of my paid sessions, you might get to see this as well. All right? Now, but to put it in a simple way, transactional journal is used to pass corrections, all right, into the account. What do I mean? Let's say, look at this, my office equipment. Okay, you can see the figure is saying 3,050,000 and 980. All right. Now let's now assume that the total office equipment is actually 3 million. The 50,980 on it, the 50,980 on it was actually meant for a payment that we made, like to repair our office equipment. It's not that we are buying asset. All right. So now this simply means that this 50,980 is supposed to fall under repair and main ten ance, under our administrative expenses. All right. And is here. So we cannot just come here and remove with magic. We have to raise a journal. Once we raise that journal, this is the journal page. All right. These are example of journal that I used for my last page students. As you can see, this is like 3 journal. Okay. So this is how journal looks like in Excel. This is a journal. This one journal. This is another journal. This is another journal. Right. So this is that journal. So once you raise the journal, you then link the journal here, just equals to, you can pick the journal for the 2 entry. That's what we use transactional journals to do. After transactional journal, the next thing is the final trial balance. Okay. And this final trial balance is the most important aspect on our ETB. Okay, what I'm saying is that, I said ETB is very, very important. Now, when you are working on your ETB, the most important part of your ETB is your final trial balance. And why is it important? It is important because it carries formula. And that's the only formula you will see here. Okay, that's the only formula you're going to see here. What does this formula mean? This formula will ensure that we combine our trial balance and our transactional journal together, so that if we made any changes into our system, into our account, we don't need to be checking. We just pass it the journal and everything is going to be okay. Now, this final trial balance carries just 2 classes of formulas. Again, this final trial balance carries just 2 categories or 2 classes of formulas. The formula of the debit column and the formula of the credit column. Let me say that again. It carries just 2 categories of formula. The formula of the debit column and the formula of the credit column. The formula of the debit column will be entered on the debit column of the final trial balance, and it's going to work for every item that fall on that side, or on that column rather. While the formula of the credit column is also going to be entered on the credit, and it's going to work for every item that fall on the credit column. I really hope you are following me here. Let me know if you are following me. Comment following. Let me know if you are following me. All right. Now, for the debit column, and I want you to pay attention here. For the debit column formula, write this down. The debit column formula is equals to the debit of trial balance plus the debit of transactional journal minus the credit of trial balance minus the credit of transactional journal. Enter. Let me take the formula again. Equals to the debit of trial balance plus the debit of transactional journal minus the credit of trial balance minus the credit of transactional journal. Enter. This formula is simple. It is debit of trial balance plus debit of transactional journal minus credit of trial balance minus credit of transactional journal. That is debit plus debit minus credit minus credit. Enter. That's it. Okay, so let me enter it once more. Equals to debit of trial balance plus debit of transactional journal minus credit of trial balance minus credit of transactional journal. Enter. So because I'm working on Excel, I don't need to be entering them one by one. I can copy and paste them for every item that fall on the debit column, right? And I can also drag it. I can do copy and paste. I can do copy and paste, and I can also enter one and drag it down. So let's just enter one and drag it down in order to save our time. All right. So just drag down. Okay. Focus on the trial balance. the final trial balance. We drag it down. Okay, so this one is for share capital, that's credit. So for debit, let's still drag down debit. All right, debit plus debit minus credit minus credit, right? So enter one, drag down the remaining ones. You are cool to go, right? Now we have entered for the debit formula. The credit formula is similar, but they are not the same. The credit formula is equals to credit of trial balance plus credit of transactional journal minus debit of trial balance minus debit of transactional journal. Enter. Okay, again, equals to credit of trial balance plus credit of transactional journal minus debit of trial balance minus debit of transactional journal. Enter. So this is credit plus credit minus debit minus debit. The first one is debit plus debit minus credit minus credit. That's the first one. The second one is credit plus credit minus debit minus debit. So once we're able to get the formula, we are good to go. So we are on Excel. Let's just enter one, copy and paste, or we just drag down so we can save our time, right? So let's enter one, let's drag down. We are still going to achieve what we are looking for. Okay. Let's drag down. All right. So now we have completely prepared the final trial balance. I want you to look at the total. What do you notice? You can see that the total agree. Now, when you link your trial balance, the total must agree. That's first. When you raise journal and you pass it in, the total of your journal must also agree. And also for the third trial balance, which is called the final trial balance, okay, the total should also agree. Okay, once you are able to achieve this, we are moving. All right, we are getting there. So these are final trial balance. This is how it looks like. So if you prepare your own, right, and your total of trial balance are not giving you the same figure, then there's a problem. And the problem can be of two ways. It is either you have entered the wrong formula or you've entered the right formula in the wrong cell. Now, what do I mean? Let me show you again. Okay, this is an asset, right? Let me enter this asset formula, the correct formula, okay? The correct formula. Let me enter it on the credit. You know, as the debit formula is debit plus debit, right? Debit plus debit, abi, minus credit minus credit. I'm entering the correct formula on the wrong side. Look at what I have. Now let's go down and see. So you can see the effect. What do you notice? You can see that my final trial balance total is different. That tells me that what? There's a problem in what I've just finished entering. And that's the implication. I entered the right formula, but I entered in what? In the wrong cell. So make sure that you are entering it in the right cell. And in the same vein, okay, if you enter a wrong formula, okay, let's say you enter credit formula on debit, which is credit plus credit minus debit minus debit. What do you notice? Let's see again. So you can see the effect. Do you notice the difference also? Look at it. Exactly. So you must ensure that you are entering the correct trial balance, the correct formula in the correct cell or the correct box. Okay. So once you have something like this, you should expect the debit column and credit column of your trial balance to be the same, right? After you are done with that, okay, the next I want to do is, or the next thing I have here is my statement of profit or loss trial balance. All right. Now, on my statement of profit or loss, Shabana, remember, statement of profit or loss only presents, or statement of profit or loss only show two things, only show two of the five elements of our financial statement. It shows the expenses and then incomes. All right, that is the only thing profit or loss should show. So all of these, they are what? Assets. So we scroll down to where we have our incomes and our expenses. All of these are assets. Aha, look at this revenue. This is where our profit or loss item starts from. Okay, so because it's revenue, revenue is income. If you remember from yesterday's session, we said there are two kinds of incomes: revenue and other incomes, right? So because this is income, it's going to be on the credit column of statement of profit or loss trial balance. So what do we do here? We don't need formula. All we need to do is to link our statement of profit or loss to our final trial balance. Let me say that again. All we need to do here is to what? Link our statement of profit or loss to our final trial balance. All right. So equals to, I want to pick the figure on the credit column of the trial balance. Enter. Equals to, pick the figure under final trial balance. Enter. Equals to, pick the figure under final trial balance. Enter. Abi, and you can also enter one and then copy and paste, or you just drag it down. That's for incomes, credit, right? Then for expenses, which are on the debit, regardless of the class of expense, whether it's direct cost, selling and distribution, administrative and general expenses, personnel costs, finance costs, any of the expenses, they are all on credit on the debit column of the trial balance, right? So equals to, pick the figure from final trial balance. You are not picking the figure from journal. You are not picking the figure from main trial balance. You are picking the figure from final trial balance. Okay, so equals to, pick the figure of final trial balance. Enter. So you can enter one and then drag it down. All right, enter one and then you drag it down. What do you notice? Now let's come down to our trial balance total. What do you notice there? As you can see, the statement of profit or loss trial balance did not agree. Abi, every other trial balance that we have been working on since, they are what? Giving us the same figure. But in this case, the statement of profit or loss trial balance did not give us the same figure. And that tells you something. Okay, it simply means one thing. Or let me first of all say, we we should not expect the profit or loss to balance. Reason is because if our profit or loss balance, it simply means that we are saying that our total income and all our expenses are equal, which is practically not possible. This is not economics. This is not costing. This is a financial statement. It's either a company make profit, no matter how small the profit could be, it is still profit. And if a company is making profit, it means that the company's total income, that's revenue plus other incomes, the company's total income is more, or let's say is higher than the total expenses put together, then they have profit. But if the total expenses is more than income, then we have loss. So the statement of profit or loss share balance is not going to balance. And this difference that we are seeing here, this difference of 7,017,600.91, all right, is the difference on the trial balance. If you look at this, the credit total is giving us 60,537,38.48, right? While the debit total is giving us 53,513,137.57, right? The credit column is higher than the debit, which means that this difference of 7 million plus that we have is representing the company's profit for the year. So on no occasion should you expect your statement of profit or loss share balance to agree. Okay, so there's a way. Yeah, I know you're about to ask, what if that figure that we have is wrong? Yes, you can have, it might not balance. Okay, it might not balance, and it is still going to be wrong. I hope you understand what I'm trying to say. What I'm saying is that you can have a difference, but that your difference, if it's not different that you're supposed to have, then you still have a problem in your extended trial balance. So how do you check? I'm going to explain to you today. All right. Now, but first of all, understand that the profit or loss will not have balance, and the difference that you have can either be profit or loss. If it's profit, then it means that the total credit cell, that's the income side or the income columns, is more than the expenses column. The difference represent profits. If expenses is more than income, the difference represents loss. That's either net loss or loss before tax, anyone. But it should not balance. Alright, because a company cannot break even in their financial statements. It's not possible. Either you make profit or you are running at loss. One of those two must happen. Alright, but there are chances that you are going to have difference, but that your difference will still be wrong. But let's move on so you can have a better picture of what we are talking about. So once you are done with this, that's how your profit or loss will be. Okay. The next thing is the what? Statement of financial position trial balance. Right? Now, on your statement of financial position trial balance, we need what? Balance sheet items. Right? We need balance sheet items. I'm trying to, if your screen is blurry, adjust your YouTube settings. If your screen is blurry, adjust your YouTube settings as I explained yesterday. Go to settings, pick the highest. I think you see resolution or something like that. Then put it on the highest. I think it's like 1000 plus. So you have a clearer screen so you can see what I'm displaying correctly. So the next thing is on display of financial position trial balance. Here, remember, we have 5 elements of financial statement. We have asset, liability, and equity. Then income and expenses. 5. We have picked 2 for profit or loss. The remaining 3 goes into this financial position. And we have 3 left: assets, liabilities, and our equity. Assets will be on the debit. Liabilities, equity, and provision will be on the credit. Alright? So equals to, we want to pick the figure under financial balance. We are picking balance sheet item this time. That's asset and liabilities, right? Enter. Equals to, pick the figure under financial balance. Enter. Equals to, pick the figure under financial balance. Enter. This one is provision. It's going to be on the credit. All right. Equals to, pick this figure. Enter. Equals to, pick this figure. Enter. Then again, you can just enter one, copy and paste, or you just drag it down. All right. Equals to, pick this figure here. Enter. Enter one, drag it down, or just copy and paste. Right. This is what, this is still our current asset. Enter one, copy and paste, or just drag it down. Right. This is liability. Is going to be on the credit. So equals to, pick the figure from financial balance. Enter. Enter one, drag the remaining ones down. Okay. Make sure you are not including items in the profit or loss. Look at what I did here now. Do you notice that I've added revenue? So revenue is appearing 2 times. It's appearing under profit or loss and under balance sheet. So you have to remove it from here. So just highlight here, and then you delete. Right? So let's go again. We have picked everything here now. So let's now scroll down and let's see what we have. Right? Let's scroll down and let's see what we have. Look at the total. Focus on the total of the statement of financial position and the total of the statement of profit or loss. What do you notice? They did not balance. Yes. And you can see the difference are the same figure. And that is what you must also achieve. Okay? Since your income and expenses are not equal, then you don't expect your statement you don't expect your statement of financial position to also be equal. And this is how you know whether what you do there is right. You must achieve the same difference. on the two statements, meaning that if you have a difference of 1,000 on your profit or loss, right, you must also have a difference of 1,000 on your statement of financial position. Ignore the bracket for now, alright? Focus on only the figures. This figure must be the same. If you prepare your own, right, and it is not the same, then two things: you might have entered the wrong formula on your financial balance, or you have linked wrongly. If you link balance sheet item inside profit or loss, you will not achieve this. If you link profit or loss item inside balance sheet, you will not achieve this. Okay, so make sure you do that. Once you are done with this, we are done with the ETB. And remember our tree diagram yesterday. The first work is on our what? Our extended trial balance, right? Our main trial balance. This. Once we are done with this main trial balance, the next thing we want to do is to use the information on our main trial balance to set up what? Our ETB, just as I've explained. After the ETB, the next thing we want to do is to set up your what? Your notes to the account. Alright? To set up your notes to the account. And based on, and in yesterday's session, right, I said there are two classes of notes to the account. The first class is the qualitative note. Qualitative note means that notes that does not include any figure. That's why we call it qualitative notes. It does not include figure. And you can get all of these notes from your company's information. That's the CAC. For example, now the corporate information and principal activities can be gotten from your CAC document. You can get that, just type it out, copy and paste and put it there. The statement of compliance is just saying that whether you have complied with IFRS or not. Based on operation, you can also put that one. Alright, now the fair value, going concern, financial instrument, revenue recognition, all of these other, you can get them for free from a website hosted by one of the big four audit firms, Deloitte. The name of the website is iasplus.com. Okay, iasplus.com/standard. All right, that's the name of the website, iasplus.com. Okay, that's the free website. So once you go to this free website, you will see the list of standards. Just enter one standard that you are looking for. Let's say you are looking for IS 16. Click IS 16. Go scroll down, you will see a lot of things on IS 16. You see measurement basis, you see disclosures. Then copy everything under measurement basis and put it on your Excel. Move on to the next standard. If your company have IS 2, go to IS 2. Copy everything under disclosure requirement on IS 2. Under measurement basis, put them on your website, on your Excel. You might need to do some little changes to let it fit into your organization policy or goal, right? Just little changes. So that is where you are going to get all of these qualitative notes. All right. So once you're able to set up all your qualitative notes, you can just put everything here. Okay. Once you achieve this, so this is another qualitative note gotten from iasplus.com. All right. Then this is the quantitative note. That's the note that carry figure. All right. The note that what? The note that carry figure. That's why we call it quantitative, meaning we are able to quantify the information. We are able to quantify the note. So that's why we call it quantitative note. And it is set up with the information that we have on our extended trial balance. It is set up with what? The information that we have on our extended trial balance. All right. So now I'm trying to clean it up. All right. So once you set them up, you want to arrange them again. The accounting standard IS1 IFRS 18 did not say or did not give us a specific way of presenting our notes to the account. All what the standard says is that we should include necessary notes and disclosures that is going to assist users in understanding the financial statement. Okay, but me, because I've been doing this, is going to be closer to 10 years now, right? Okay, I've been like doing this alone myself, it's going to be closer to 10 years now. So I have a way of doing my work, presenting my work. So even when my client sees their report, they are going to be happy that, oh, we give someone that knows how to handle the tax, the job. So I like presenting a very clear. That's why you see a lot of arrangements in this. And I can actually give you access to this template if you wait till the end of this course. It's not free. Let me start again. All right. So now this is my PPE note. You can choose to bring in your expenses note first. All right. You can choose to bring in your capital note first. You can choose to bring in your revenue note first. The standard did not say PPE should come first or revenue note should come first. All right. But because I always prioritize information on the balance sheet more than the information on the profit or loss. I don't know why. I just like balance sheet information. Maybe because it's usually for longer term, right? I always prioritize information on the balance sheet over information on the income statement. That is not the standard. That's not what the standard says, but you can do the same. All right. Now, what do we mean? I want to link all this page to my extended trial balance. All right. I want to link all this information here to my extended trial balance. So this is furniture and fittings, this is computer equipment, this is office equipment, and this is total, right? So now I want to come down to where I have the total sale of furniture and fittings. I will now link it to my ETB, because if you remember from the tree diagram I showed yesterday, I said the first thing we are doing is to what? To set up our notes to our trial balance. Abi, once we have set up our trial balance, we then move down to what? Our extended trial balance. Meaning that we use the information in our trial balance to set up our extended trial balance. Right? After completing our extended trial balance, we will now use the information on our extended trial balance to set up our notes to the account, which is what I'm about to show you, right? So that is the flow, okay? So now we are on the notes. Equals to this furniture and fittings, equals to go to the ETB and look for furniture and fittings under the statement of financial position. As you can see, this furniture and fittings, you pick the figure under the statement of financial position, right? Click the figure, enter. All right. Okay, you can see I have this. So this addition here is just saying that this figure minus this is giving me this. That's new asset during the year. So computer equipment, if your company has an existing figure in their, they have an existing asset, just come and enter the asset balance 9,000. Sure you get, so, or 90,000, anyone. Okay. Then for computer equipment equals to, you do the same thing. Go to the ETB, computer equipment, pick the figure under statement financial position trial balance, enter. Office equipment equals to, go to the ETB, pick the figure under statement of financial position, enter. All right. So this total year is the total of all the sale. Then we move down to depreciation, right? Equals to, go to the ETB and pick accumulated depreciation for furniture and fittings, equals to ETB. This is the accumulated depreciation. We are picking the what's it called, the trial balance, the same financial position item, enter. All right. Computer equipment equals to, go to the ETB, computer equipment, okay, 129. Pick the figure from balance sheet. Okay, enter. All right, then office equipment equals to, go to the ETB. We need office equipment, which is this 427, right? So we go to the balance sheet, enter. So this net book value is the total of the cost minus depreciation. That's how we go net book value. So it's just this minus this. So you can just copy and paste. Okay, so you can have that figure, and that's how we go that. So the next one is what? Inventory, which is stock of material, equals to, go to the trial balance and look for what? Our inventory cell. Go to the trial balance and look for inventory total. Inventory, these are inventory. Okay, this, which is this, enter. All right, the next one is our what? Cash and cash equivalent, equals to, go to the trial balance. You need cash in hand. Cash in hand 159. Pick the figure, enter. Ecobank naira equals to, go to the trial balance. When you get here, we have two Ecobank accounts. We have a USD account and we have a naira account. On this my trial balance, everything has been converted into naira. It doesn't mean that this 25,000 that you have on your, this 25,000 that you have on your Ecobank is in dollar. No, is in naira, that has been converted already. So we want to come down here and pick the figure here, because we are picking the two at the same time. So we pick the first one, then you do plus the second one, enter. All right, Stanbic IBTC, go to the ETB. Stanbic, the same thing. Pick the first one plus the second one, enter. All right, mutual fund account equals to, mutual fund is only one mutual fund 750, enter. So that is how we have this. Then for the receivables, right, equals to staff loan. Let's go to staff loan. Let's see staff loan. This staff loan 150, enter. Prepayment 9.1. So we link this to this. This is like a sub note. We link this to this. Director's current account equals to, go to the ETB and pick director's current account, enter. All right, then let's link our ETB. Our prepayment note equals to prepaid rent. Let's pick prepaid rent. These are prepaid rent 115, enter. Prepaid expenses equals to prepaid expenses. All our prepaid expenses. Okay, we have this prepaid expenses. We have this. Okay, okay, prepaid expenses is accounting fee and templates. So accounting fee, this plus our templates, right? Then refundable deposits equals to refundable deposits. Click this figure, enter. So that's how we got for this. All right, so that's basically how we enter for this, 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 right? And that's how we enter for all of these. Just equals to, you go and pick the figure from the extended trial balance. Once you are set up your note, the next thing you want to do is now go over to the individual financial statement component. So let's go to the balance sheet first. Let's go to our balance sheet first. Okay, let's go to our balance sheet. On our balance sheet, all right, so let's remove this. Let's remove this. Let's clear all of this. On our balance sheet, we have PPE. So equals to go to the notes. You need the PPE note. Scroll up. So you pick total of net book value. Click this figure, enter. Right, inventory equals to, you are now linking your individual financial statement component to your notes. Click the total of the notes, enter. Right, receivables equals to, go to your receivables. Where do I have my receivables? This is my receivables total. Pick this figure, enter. All right, cash and cash equivalent equals to, go to your cash and cash equivalent note, pick this figure, enter. All right. So we have this, right? So we have total of assets printed yellow. Then for our share capital equals to our share capital. So let's go and set up our share capital. I think I deleted the notes here. Okay. Okay, hold on. Okay, our share capital is supposed to be here. Okay, something is not right here. Okay, give me some minutes. Okay, there's a problem here. All right, so now let's go back now. All right, so now our share capital is also picked. Then our retained earnings. Now, retained earnings represents the difference on our profits. So let's go and pick our retained earnings. That's our profit difference. Pick this total here, enter. All right. Now look at this. Then we pick our payable. Look at this. Our balance sheet did not agree. Ordinarily, what we expected to achieve is that the total of the assets and equity and liability must be the same. So let's now go back and see where the problem is. Now look at this here. We have 15,000 difference, right? Okay, so you can actually see how we do this in practical terms. We have 15,000 naira difference. Let's check first. This is linked to our notes. All right, this is linked to inventory. Okay, receivable is linked to receivables total. All right, okay, cash and cash equivalent is linked to our cash and cash equivalent total. Okay, so we have 15,000 naira difference, right? And the difference is coming from here. Let's come back to this. There is a 15,000 naira. Look at this figure. This is the figure we're looking for. Shareholders loan. Shareholders loan. Okay, it's supposed to be part of what we have under our current asset. We give loan to our shareholders. This is just for practice purpose. Ordinarily, it is not supposed, there's nothing like shareholders loan. However, because we are still practicing, so our shareholders loan supposed to be part of so it will be part of director's current account, right? Plus shareholders loan. So if you go back now, you see that it has agreed, as you can see. So that's how it happened. If you did not pick an item or you pick a wrong item, you have it splitted out. So you have to be able to know, okay, where is the mistake coming from? You know how I got this? When I saw the difference, I know where exactly I need to look out for. I go back to because I know that, okay, I link this to my notes. I check all the notes. I say all the notes are linked correctly. Then that means I didn't pick something from the into the notes. That's how you check your work too. All right. So once you are done with this, the next thing you want to do is profit or loss. And you link revenue to revenue notes. You link direct cost to direct cost notes. You link expenses to their notes. The next one is what? Statement of changes in equity. You link the same thing. All right. Just equals to go to share capital note, pick the figure. return earning, go to where we have the profit note, pick the figure, then you have these totals. Okay, then the statement of cash flow is prepared using the principle of IAS 7. And if you understand IAS 7 very well, IAS 7 gave us three activities that we can get our cash flow from: operating, investing, and financing activities. Those are the three activities that a company can get cash flow from. And when you are preparing your cash flow, there are some things that you should focus on. First, you are starting your cash flow with profit before income tax. And this profit before income tax must be the profit in your income statement. Let me say this again. This profit before tax is the profit from your income statement. After that, you make adjustment for items that does not involve cash. If you have depreciation, you add back your depreciation. If you have impairment, you add it back. Reason is because we are under cash flow, and cash flow is only key on movement of cash. If cash is not moving, then it is not an item of cash flow. Let me say that again. If cash is not moving, then it is not part of item of cash flow. So that's why you make sure that whenever you have item that does not involve cash movement, you have to adjust for them. Then you do changes in your working capital. When you are doing changes in your working capital, your focus should be under current assets and current liability. Okay, when you are doing changes in your working capital, your focus should be under current assets and current liabilities, those two. Then after you have got that, you get net cash flow from operating activities. That's the addition of your profits, your changes in working capital, and your adjustment for cash movement will bring you to net cash flow from operating activities. After that, you move down to your what? To your cash flow from investing. When you are doing your cash flow from investing, your focus should be under non-current asset section of your statement of financial position. Okay? When you are preparing your cash flow from investing activities, your focus should be under the non-current asset section, okay, of the statement of financial position. That is where your focus should be, right? Once you have done that, now if cash is going out, it's going to be minus in your cash flow. If cash is coming, it's going to be addition to your cash flow. Then we have cash flow from financing activities, which is cash flow from where the company is getting money from and where they are putting the money into, where they are getting money from. We have shares, we have dividend, issue of shares, all those stuff. So if money is coming in, it's positive. If money is going out, it's negative. So for each of these activities, operating activity, investing activity, and financing activities, you are going to get net cash flows for each of them. If you add all the three net cash flows, you are going to arrive at net increase or decrease in cash and cash equivalent. You arrive at what? Net increase or decrease in cash and cash equivalent. After that, you bring in your opening balance of cash, then you should balance your cash flow. At the end of the day, the cash and cash equivalent at the end of the year must agree with the balance that you have on your balance sheet as cash and cash equivalent. Once you're able to balance your cash flow, you have successfully prepared an IFRS based financial statement from the scratch. Alright, and that is all I have for you. If you have question, now we are into the question and answer session. You can drop your question. You can drop your question here on the group. You can drop your question on the group, or you can put it here. I will always see it. Okay. So now this, while you're typing your question, this is one of my students. His name is Michael. So he said, "Thanks, boss. I will check it up. Like you did a great job with the financial statement. I use Sage Evolution software for posting. So I pull out trial balance for different period and prepare them manually with your Excel template. Boss, the results were accurate. I just amended your template and linked some few items together. Thanks so much. You perform beyond expectation. The service you render is far above the fee." Question, question, question. That's a review from one of my students. If you have question, now is the time. Mr. Michael Omode, I didn't get this your question. Can you rephrase, how did you interpret and represent each item in financial using IFRS standard? Every company, I didn't get your question, but I believe you're asking about the line items on the financial statements. Every organization have uh they have their chart of account. I will have list of assets, list of expenses, list of income. So I don't need any IFRS to tell me this is an asset. I don't need any IFRS interpretation to tell me this is income. So far I can see from my operation. Alright, I believe that's what you are trying to ask. But if that's not what you are trying to ask, you can rephrase your question and I'll be glad to answer them. You can put your question on the group and you can also drop it here, right? You can put your question right on the group and you can also type it here. Because do you need to compare and relate each item in the financial by each company to IFRS? No, no. All you need to do is to get the list of item for each company. Okay, this company, I want to see your chart of account. So by chart of account, you will know, okay, what does this company recognize as revenue? What do they recognize as assets and all of that? So this is another question. How do we incorporate annual depreciation in a profit or loss as it is an expense head, considering the fact that we use accumulated depreciation in our profit in our evaluation? Good question. We just raise journal. You compute your depreciation, you raise the journal and you pass it in. That's all we need to do. Raise the journal and you pass it. When you are raising your journal, you debit depreciation expenses and you credit accumulated depreciation. That's the journal. Then you pass the journal through your ETB. Then it enters into your profit or loss and it enters into your financial statement. How do one get this template? Yes, there is a chance to get it, but I only have Mr. Martins, the code. I don't know. I only have 10 slots. You are getting the template, you even get more than the template if you stay through the end of this call and you took an opportunity to get in. Yes. So Mr. Edit said, I want to know if it is compulsory to prepare an essential balance when preparing a financial statement. If you want to if you want to do a good job, okay? If you want to do a good job and a work that, okay, you feel relaxed that your work is neat. I always recommend doing your extended trial balance. Yes, I always recommend doing your extended trial. I will not say it is compulsory, but I will say it is necessary. All right. By IFRS standard, no. Okay. By virtue of doing a good task and making your work much more easier, yes. And the funny thing here is that when you are preparing your financial statement, all you need to do is to set up your ETB once. And every month or every year, or if you are doing a weekly financial statement, you just need to what? Change your trial balance, and then boom, your work is done. So like every month, if you don't have ETB, every month you have to what? Checking each page. You are wasting more time than you are stressing yourself. But once you can commit 15 minutes or 1 hour of your time to set up the ETB for once, then you keep using it every time. But is there any IFRS standard that say we should prepare ETB? No. Does it make sense for us to prepare ETB? Yes. I don't get this question, Mr. Lawal. How is the note website written? I don't get the note website. I don't get what you mean by the note website. All right, so I think okay, so before we end the call, let's quickly hand up. Just before we end the call, I want you to give me just 5 minutes. Let me tell you Michael's story. Michael was just an accountant in a very small company in Lagos in I think 2021. When he stumbled on one of my posts on Facebook, like many of you all did, where I was talking about financial statement preparation, he attended the training like you attend. I paid a token for one of my program on financial statement preparation. He dedicated about 2 to 3 weeks to learning and practicing how to prepare financial statements. He also told some of his friends who know business owners that he could help them prepare financial statements and clean up their record. Surprisingly, Michael got 2 to 3 businesses to work with him. And before you know it, Michael is now making a cool extra income working for about 3 to 4 businesses remotely. He doesn't need to go to the office. Every month, these people they send down their trial balance or their Excel information, their bank statement, they send it down to him and he work on it, making extra income. Even if Michael is not going to office, he make a good amount of money. Okay, and you know what extra income is in this country? Well, I know some of you might be thinking Michael is special, Michael is lucky, Michael is this, Michael is that. And let me tell you this. Do you know that you are also special? And at the same time, you are not special. I'm going to explain. You are special because there is no other person on this planet who can take your knowledge, everything that you have learned, and the information that I've shared with you in this master class from you. Surprisingly, not even me. I can't take it from you the same way I could not take it back from Michael. And that is absolutely amazing. But you are not special because professionals like you, I mean, people like Michael, all around the world, are achieving massive success, managing their time very well with the process I just shared with you easily. Many people have commended my effort on them, and I've received so many recommendations from my students, my supervisors, and my mentors. I want to take a look at this. This is one of my students. Her name is Faith. She said, "Dear sir, I want to be grateful to God for your institutional role that you have played in my life. As my lecturer and mentor, you have made accounting profession so easy and interesting. Your knowledge, skills, and expertise in the accounting field are quite exceptional. And the enthusiasm you always display in sharing the skills and knowledge is quite admirable. Thank you, sir, for all you do. The accounting world is blessed to have you." This and that person, this is Mr. Wemo. This is my boss, my supervisor, and also my mentor. He said Jami Fatimbu is a colleague at Ben Rabadejo and Co. Child Accountant. He is smart and hardworking. He's always ready to take up new challenges at work. With the short time I worked with him, I saw a brilliant, energetic, young, sharp man who opened up his mind to learn and help clients find solutions to their tax and financial matters. The book is self-explanatory and a good guide for preparer of financial statements. It touches the elementary of accounting and it will be useful for accountants who struggle to prepare financial statement or management account. Olawale Wemimo. This another person said, apparently, I don't want to say anything since I've been reading your post, but my conscience is judging because if I didn't share this review, definitely I'm holding the good info about the book and I'm being selfish. Truth be told, your FSME has provided an edge for me in my organization because they never believe that I could have them a comprehensive statement of accounts. Their thought was that SOA, that statement of accounts, can only be prepared by external auditors or chartered accountants. The area of ETB really helps and makes everything comes easier. Despite that I have not tendered my HND certificate because I'm still schooling, my MD increased my fee to 120K. I believe by the time I'll be chartered, I will become a better accountant with this your guide. But I'm always open to learning and opportunities. This another person, this person was wishing me on my birthday and he said, happy birthday sir, I haven't met you before, but the truth remains that my journey into account and finance industry became easier with our path crossing virtually. You gave me access to FSME and ever since then I've gained access to every aspect of my interest in the profession through your network. My prayer is that God will bless and keep you. You will make your life so sweet than what you had ever imagined. Cheers to long, healthy, fruitful, then the birthday wishes. So, guys, I just gave you my first approach to learning and preparing financial statements. But I'm sure you can imagine this is just the tip of the iceberg. There are so many things. There are so many things that you also need to learn, right? So there is more to this. So now you have two options, right? You can go straight to Excel and do it yourself, just like I did. That it took me about 2 years to completely figure it out. Or you can follow a proven path to success because I've already put together comprehensive video sessions on how to do this by yourself. I mean, you don't have to try to figure anything out. It is a done for you financial statement course titled Financial Statement with Microsoft Excel FSME. Before I take you through in detail what the FSME is, I want you to listen to what people like you have to say about it. This person, her name is Victoria. He said she has learned how to create financial statement through Excel, linking all the account heads together. She has also learned how to use journal that she uses a lot at work. She said, I can't wait to practice. It was an eye opener for me. I can conveniently put it in my CV that I can prepare financial statement. The value was more than the amount. This is another person. Her name is Precious. He said, good morning, Mr. Jamiu. Thanks for the financial statement training. It was a wonderful experience and an eye-opener. You are indeed a great tutor. As a matter of fact, I've been able to use the knowledge you share to prepare financial statement for a friend who needed a financial statement to apply for a grant. Everything was perfect. All accounts balanced. Thanks for all you do once more. I recommend you to anyone who would love to learn accounting in its simplicity. This is another person. Her name is Angela. She said, my name is Angela. I came across this training on WhatsApp when Mr. Jam posted a flyer for the training on how to prepare a complete set of financial statements using Excel. To be honest, I was skeptical because the cost was too low. But to my shock, the value was so much more than the cost. I recently got a job and all that I learned from this class is what I'm using. And I've not even used all the knowledge. I would recommend this training for anyone looking to advance in their career, especially finance professional. This is another person. Her name is Kehinde Alabi. She said, good evening, sir. It has been a while, and tonight I've come to say a thank you. You have been very instrumental in my career path. I gained confidence and I'm truly grateful. Thanks for being a resourceful and impactful person. FSME was an answer to my prayer when I seriously needed clarifications. I started my career, and in the first 2 weeks, I produced the first set of statements for the firm. In fact, the director brought 3 different auditors to check the work. All they could say was, who trained you? My brain was screaming your name, Fateimbo Jamiu. Sir, I don't know how best to appreciate you from the depth of my heart, but I want to say thank you. See, I can keep showing you tons and tons of testimonials and reviews from ordinary people like you who have no knowledge of how to prepare IFRS-based financial statement before they met me. Well, I'm very sure now that you're about to ask me, what is in this course for you? Accept my warm invitation to take you through what the FSME is going to teach you. The FSME course contains video sessions, templates, an ebook, that's my book, and you can study each of these sessions at your own convenience. So you don't have to wait for somebody, or you don't have to wait for a link. No. Once you get access to the course, you can start right now tonight. It includes a number of things. 3 videos that explain to only you. It's like a one-on-one with me. That explain to only you the procedure of preparing a complete IFRS-based financial statement with Microsoft Excel. Each video is actually 10,000 naira, and the 3 combined together is 30,000. Bonus A, you get a comprehensive video on how you can raise journal into the financial statement. For this video alone, the access is at nothing less than 5,000 naira. You also get a separate video that will teach you how you can get a PDF copy of your financial statement right from your Excel page. This video is costing 3,000 naira. You also get 2 videos on how you can determine with accuracy your company taxation, which includes income tax, education tax, and police levy, and how you can also compute capital allowances, all capital allowances. This video is currently selling for 20,000 naira. Also, you get access to the almighty ready to use plug and play financial statement template, which is selling for 3,500 naira. Bonus session B, you also get a copy of my recently launched guide, that's my ebook, titled 7 Simple Steps in Preparing IFRS-based Financial Statements. The secrets I reveal are worth thousands of nairas, but I'm giving it out to you at 5,000 naira, which is the current price. You also get access to join my fastest growing accounting community, where you get to meet and mingle with people with the same future goal and ambitions like you. Joining this community is an exclusive WhatsApp community. It's not a public WhatsApp community. So joining this community is actually currently going for 2,000 naira. We are currently over 5,500 accountants in this exclusive group. You also get a direct and uninterrupted access to my exclusive WhatsApp list, where I will help you, attend to your questions, and assist you in getting better. This gives you a level of access to me. Alright? You also get access to join my community training session anytime we are hosting a free training, which is 4,000. Right? You also get 2 detailed videos that explain how to prepare IFRS-based financial statement from bank statements. I know many of you don't know that we can actually prepare financial statement from bank statement. That is, if the company don't have any record in place, all what we could lay our hands on is just the company bank statement. Alright? Yes, there's a video on how you can actually prepare IFRS-based financial statement from the bank statement. 2 videos explain that for you, and the 2 video combined together is selling for 18,000 naira. You also get video and template that you can use to track your company's account receivables and account payable correctly. This video and the template together is selling for 15,500 naira. You also get a link to access my special compile ebook and PDF store that contains series of acts, guidelines, templates, among other things that have aided my career growth. This link is actually selling for 8,000 naira. You also get an Excel file that contains names and email addresses of accounting firms with active practicing license across Nigeria. For those interested in discussing with audit, or you want to join audit, so you want to enhance your career, this Excel file is going for 5,000 naira. Then you also get access to all final feature updates to the FSME. If I'm going to give you access to those updates today, is actually paying for 25,000 naira. So if you sum up all of the above, you agree with me that the full package of the FSMA actually worth 149,000, which is the price I give to people that did not know me. If you actually came in through, let's say you saw my profile or my Facebook, one of my virtual assistant attended to you, and you ask for the FSMA, they'll give you this 149,000, which is the price I give to people that I don't know and I've ever made it before. But let me ask you this, and I need your unbiased response. Does this FSME sound like something you want to have access to? Does it sound like something you want for yourself? Let me know. Just comment, yes, I want it. No, I don't want. All right. Okay. So if yes, that means I will also like to give you access to join me in a financial seminar with Microsoft Excel course, which is called FSME, your final solution to the preparation of a complete IFRS-based financial statement. Aregbe Suleiman is somebody like you who came across my training on LinkedIn and decided to what, take advantage of the price. See what he said. He said, my name is Aregbe. I came across this training on LinkedIn where Jami mentioned that he's going to host a training on how to prepare a complete set of financial statements using Microsoft Excel from the scratch. I joined the training, but I got more than what I paid for. He literally shared what he has learned as regards preparing financial statements. The surprising thing he did was that he added bonuses that I used to learn how to compute capital allowance, income tax, and education tax. His partner, Alexis, also showed us how to get financial statements in PDF format. I will personally recommend this training for anyone that wants to learn how to prepare financial statement from the scratch. This is another person that has been working with me. He said, brother Mike, thank you for going with me. Salary was increased as scheduled today. Alright, this is another person. He said, apparently, I do not want to say anything since I've been reading your post, but my conscience is judging because if I did not share this, I'm definitely holding the good information about the book and I'm being selfish. Truth be told, your FSME has provided an edge to me in my organization because I never believe I could have them prepare a comprehensive statement of account. Their thought was that SOA can only be prepared by chartered accountants or external auditors. The area of ETB really helps and makes everything come easier. That's why I have not tendered my HN certificate because I'm still schooling. My MD increased my fee to 120K. I believe by the time I will be chartered, I'll become a better accountant with this your guide. Boss, I'm open to learning. So I'm ready to give you a lifetime access to this course at almost zero cost. At this point, I want us to make a simple agreement. You agree with me that courses like this are not meant to be priced at 40,000 naira. I just want to agree with me and confirm what I said. You are not going to pay that. All right, they should be higher, right? But I'm going to be giving it out to you at just 20,000 naira. That's 50% off for you alone. You see, my friend, you can decide now that you don't have just 20,000 naira to get what could change your life forever. And as I totally understand, economy is hard, right? You don't have to change your life. All right. As a matter of fact, it means that this is not for you. You can exit this call right now. And let me talk to only one person that I wanted to help. I need just one person that I wanted to help. But before you go, what I'm trying to show you is that I'm not trying to raise money or make a profit with this course. I've sold over 700. if no more than 1,000 to speak already, like to people like you already. There are chances that as we speak now, someone somewhere is paying for the FSME. All right. I want you to know that at just 10K, it is at a complete giveaway. And as a guarantee, I want you to come close and hear this. If you gain your own unexpired access to the FSMA, and after going through it, you study everything, you watch all the videos, you practice, and you feel like you are empty handed, or probably you didn't get value for what you paid, send a message and ask for your refund. No question will be asked. You get your full money back at 100%, and you still get to keep the FSMA with you forever. So if you are seriously interested in this, I think you should listen to this very well, because there's a little problem. My team and I only have 10 slots open for any final access fee I'm giving you on this webinar. Just 10 slots. Once these 10 slots are filled up, you won't be able to get access at that amount again. And one more thing, hear this. We launched a promo that closed few weeks ago, discounting the FSME access fee to 15,000 naira. Though if you have been following me on WhatsApp, you notice that this promo has actually closed. Yes, the FSME is actually going for 25,000 naira as we speak. Yes, but I'm ready to accept all the blame for my team, so I can give you access to this extension of the promo sales for the next 8 days, starting from today, since this is October. And here is how this is going to work. Don't miss this for anything. If you are looking to having your own special access to the FSME, I think you should listen to this properly. Your access fee to the financial statement course is going for 20,000 naira presently for just 10 people. But there's a catch with the promo extension I want to give you. With this extension, the access will be available for you at just 15,000 naira today. Just 15,000 naira today alone. After which it will increase by 1,000 naira daily for the next 8 days. So what does this mean? This means that you can get the course at 15,000 naira today, but if you delay having access till tomorrow, which is Sunday, you pay 16,000. Then after that it becomes 17,000. The access fee increases by 1,000 naira each day pass afterward. So today is 26th of October. You are getting it at 15,000. Tomorrow 27, it goes to 16,000. 28th of October, 17,000. 29th of October, 18,000. Then 1K every day. And by 3rd of November 2024, the promo will be over and the access to the FSME will be going for 40,000 naira, which is the original price. So this is only for fast action takers. So you get to pay just 15,000 naira today alone. You get to pay just 15,000 naira today alone. Just 15,000 naira today alone. That is for you alone. So use this link that I just sent to the group. The link is on the group right now. So the link is on the group. Use this link that I just sent to the group to access your FSME at today promo sales. Just 15,000 naira. Now, that is way cheaper than what you spend on food in a month or in a week alone. So if you exit this call and you did not click the link on the group, that link that I just sent to the group, you might never have this opportunity again. Just to be clear, right? Just to be clear, when you pay 15,000 naira today, you are getting the following. You're getting videos of financial statement training. You get video on how to raise journal into the financial statement. You get video on how to obtain a PDF copy of financial statement. You get video on how to compute capital allowances and taxes. You also get access to the financial statement template. You get access to my recently launched guide titled 7 Simple Steps in Preparing IFRS Based Financial Statement. You get access to join my fastest growing accounting community. You also get access to my exclusive WhatsApp list where I will attend to your questions and assist you in getting better. You also get access to join my community training sessions. Alright, you get access to join my community training sessions. You also get access to watch 2 videos that explain how to prepare IFRS based financial statement from the scratch. Videos and templates. You also get access to download what videos and templates that you can use to track companies' accounts receivable and payables correctly. You get access to all my ebooks and PDF guide. You can download them, and you also get access to Excel file that contains names and email addresses of accounting firm with active practicing license across the country for those interested in joining all dis thing. So you also get access to all the future updates to the FSMA. But if you did not pay just 15,000 naira today, you might have to pay more in the future. Use this link that I just sent on the group. The link is on the group as we speak, and that is a wrap just for 10 people. Thank you for having me and enjoy the rest of your day. Bye. The link is on the group. Thank you.